Welcome back. It's time to talk commodities. We have Manisha with us. And Manisha, earlier in the morning, we were talking about the fall in the dollar, right? So you tell us now, how's it looking and what do you have your eye on at 10 a.m.?
Oh, well, yes, the dollar index declining all the way to 100 clearly has been supportive for many of these dollar-denominated commodities. And I'm looking at the crude oil prices right now because a very smart rebound from the lows of previous week is what we are working with right now. You know, last Monday, we were trading at an 8-month lows and almost nudging around that 74, 75 mark for Brent. And we are back around very close to $80 a barrel at this point in time. So while it was a gain of 2% on Friday, we're looking almost a percentage point of gain in the Asian markets right now as well. Various factors in play here, and I'll start with the geopolitics there, and that clearly was something over the weekend that the markets have taken cues from. So Israel and Hezbollah exchanging missile strikes over the weekend clearly has been supportive. There are concerns that this overall conflict within the Middle East perhaps could escalate going forward, and that is weighing onto the markets there. There also are supply risks going forward, and as I said, the West Asia is looking at a broader conflict at this point in time. Not just Israel and Hezbollah, but the kind of ceasefire conversation that we did see happen in Cairo, Egypt, also seems to be falling apart right now. There is no progress as of now towards Israel-Hamas ceasefire, and that's also adding some premium to the prices there. The markets also are looking at the U.S. Energy Department, which is buying a big chunk. We are looking at almost 47 million barrels of crude that the U.S. SPDR has bought, and this has been at an average price of around $76 there. The U.S. did sell almost 180 million barrels, and this was in the year 2022. That was just about when the Russia-Ukraine war had broken out. We did see crude oil prices, gasoline prices, heating oil, all of that go up. So with the U.S. SPDR also buying crude is something that the markets are taking in as a positive. The U.S. crude inventories is yet another factor, and a very sharp decline onto that one. 34 million barrels have seen a decline in last 8 weeks. So when you look at this number, this is the lowest in 2 years in sense of U.S. inventories there. Also, in the last 8 weeks, the kind of decline that we have seen has brought the crude inventories to the second largest lowest in a matter of last 10 average years there. Global markets also are looking at crude inventories constantly declining. If you look at the global markets here as well, in the advanced economies, that is, the crude inventories are now at the lowest by nearly 4% of a 10-year average. So various factors, as you can see, are supportive in case of crude oil prices there. An interesting report which is coming from Morgan Stanley, though, and the good news really ends there, because while there are supply risks and geopolitical tensions and the weakness in US dollar, which is supportive, but it really has to do with demand, which from China has been on the weaker side. The markets also are looking at a bit of a discount in some of those European countries as well. So Morgan Stanley, for one, says that the demand growth has been revised down to 1.1 million barrels per day for this year now. Also, the markets will watch out for the OPEC and allies meeting for the month of September. Remember, those voluntary output cuts that OPEC and allies have been giving in will start to ease off from the month of October, so the September meeting in that sense becomes very, very important. Another very important Morgan Stanley statement comes in suggesting that the crude prices from here on perhaps can see further decline. For the fourth quarter, they're looking at an average of $80, but for the next year, they anticipate 75 as an average for 2025. So next year perhaps could be a bearish crude oil prices, but at this point in time, we are looking at some support.
Okay, all right. Thank you very much for that wrap up. And of course, crude oil in focus. Manisha, thank you for that. We'll